There's a major bank run taking place today. It's called SVB, Silicon Valley Bank. Now, this one institution is not known to the public generally. They're lending to all of these different financial companies, tech startups, healthcare, and so on. But it's an extremely big bank in its own way, and the bank run has begun. Liquidity is drying up massively, and they can't even sell their company. This could have a dramatic domino effect that I'm going to show you today. So you want to stick with me because first we're going to look at what is actually happening. Then we're going to talk about why this is important. What type of companies are going to be affected by it, and is that going to impact you? All of that today. Let's begin by looking at what Michael Burry had to say. It is possible today. We found our Enron. Very important stuff because you can see that there have been these events that happened in the past, whether it is an Enron, whether it is a Bear Stearns. There's always this one pivotal moment that's discussed in the history books. We don't really realize it at the time, and you will see the quotes after quotes, some of which I'll show you today, that you don't need to worry about this bank, it's doing okay. How about Jim Cramer? He said the same thing, right? Well, it is important to look at these events and then extrapolate from that point, because we start to realize actually a lot of things are in fact interconnected. Dow falls for the fourth day as Silicon Valley Bank woes hitting bank shares. Now, you've probably looked at the market and said, hey, they're up by now. What's going on? Well, the market is not going to react to anything that might happen, because at this point they're looking at the jobs numbers. Oh, everything's so fantastic, everything's so great. So they're reacting to that. They're not going to look at SVB and say, well, there's a problem there. Let's move on. Let me show you. This is SVB's own website. Proactive guidance for the long run. I have a feeling that they weren't so proactive in their own company. But anyway, these are the three things that they do primarily, and that's startup banking, venture funded, and corporate banking. So I want to show you the two things which is really the big concern right now, and that is the early stage startups as well as the venture funding. These two things right now, look, it's very big in Silicon Valley. This is an important thing because they have been the biggest bank to all the lenders. They're lending all of these to individual companies and businesses that are starting up. But what has changed? Why is this the case? We're going to talk about that in a few minutes. Just understand what they do and why. Think about it, what's been going on since 2022 that's very different than today. Stick with me, okay? Look here, Silicon Valley Bank Financial in talks to sell itself after attempts to raise capital have failed. They tried to actually say, bring us more in. So they're funding businesses, but they need their own funding. And they couldn't make it happen. They couldn't do it. So as a result, they're saying, okay, we got to sell. So now who's going to go out there? Who's going to buy them? JP Morgan? Are they going to do it? Perhaps, but they're not going to buy it for a reasonable sum. All the money's leaving. There's a bank run happening. They're going to buy it for pennies on the dollar, and who knows what's going to happen. Well, this company drops another 60%. The stock gets halted as pressure mounts on the banking sector. Other companies are directly impacted. If you own financials, take a look at your portfolio today, and it might have been taking a serious hit. Bonds as well. We're going to talk more about that in just a second. Now, I want to show you what's going on and why. This is key, okay? SVB announced that it needed to sell billions of dollars of assets to make its customers whole. That's not a good thing, okay? This is terrible. This is something that doesn't happen too often. We don't see a major bank failing. SVB, a relatively unknown bank outside of Silicon Valley, lends to higher risk tech startups that are struggling as interest rates rise, there we go, and venture capital money dries up. That's so big. That's so important. Interest rates were increased. The actual financial conditions have been tightening, and we start to see the reverberations, the knock-on effects that occur as a result of this. This is one very big problem That is going on right now. The tightening happened since 2022. That is starting to have its effect here. It doesn't happen overnight. It's not as if they flip a switch and suddenly everything collapses. It's the next Bear Stearns. No, but we're seeing the effects today. Let's move on to the part where they say the bank partners with nearly half of all venture-backed tech and healthcare companies in the United States, many of which pulled deposits out of the bank as rising interest rates raised concern that the bank may not be able to get all of its customers' money back if they pulled on the deposits en masse. A bank run taking place right now. This isn't fiction. This isn't history. It's happening today. Yes, it's one bank, but what does that actually signal? Well, if this bank can't lend to the venture capital, can't lend to the startups, what does that mean for the economy? What does that mean for growth? What does that mean for all of the financials? Well, maybe they're going to start to say, you know what, maybe we're going to cut back. Loans start to decrease. This stops the economic growth. And then you have a self-fulfilling prophecy where we end up in a recession that was perhaps deeper than what was going on before. This is today. I can't believe it. And people have said, nah, they're not going to raise interest rates. Every single person that said they're not going to raise interest rates, and I'm talking about the influencers out there, they need to apologize. They need to say they were wrong, and they need to admit that it is extremely dangerous what they've done. Treasury says it's aware of recent developments as Silicon Valley Bank troubles rock markets. Hey, don't worry about it. The Treasury is getting involved. In fact, even Janet Yellen says that her department is monitoring a few, oh yes, that's right, a few banks amid the SVB fallout. That's the ticker, by the way, in case you're interested. Just looking at this situation, it's kind of funny, if it wasn't so bad, that you see what happens. They're starting to monitor because who did they loan to? Who's affected? Where did they get their funding from? All of these things are interconnected, and you got to understand this is a brand new development. I'm probably bringing the most detailed video about this subject right now at this time. I'm trying to bring it to you as quick as possible. So it's unfolding. It's unfolding, okay? If you remember back in 2008, our liquidity position is strong. We are adequately capitalized. That is Bear Stearns, March 2008. And yet, what happened after? The same things happen all the time. They never, ever are able to actually resolve anything. Nothing was resolved from the 2008 financial crisis. They didn't fix the problem. Not at all. One bank folds, another wobbles in Wall Street. And Wall Street asks if it's a crisis. More lenders are struggling to keep deposits from fleeing. Silicon Valley Bank is just the tip of the iceberg. We've got to keep a close eye on this. Stay tuned to the channel. Hit subscribe if you want to know all the details as they come out. This is basically just talking about what's happening with Jerome Powell and everything that occurred up until now. I think it's pretty obvious if you've been watching the channel before. This is something that has been highlighted. Increased interest rates, you tighten the financial conditions. Of course, that's going to be a problem. Peter Thiel, Founders Fund, advises companies to withdraw money from SVB. He knows what's going on. He realizes it. The writing's on the wall. If you got money with them, it's time to pull it out. This company is going to collapse. It's just a matter of if the assets are going to be bought up by somebody like a JP Morgan. So we'll see how that unfolds as well. Bill Ackman, very funny, he came out there and basically said, we need a bailout. We need a bailout for this company right away or it's going to be a big problem. Now, are they going to get a bailout? Maybe, but it might be from like a big institution, not necessarily from the government. I just thought it was funny that Bill Ackman's coming out and sharing his thoughts. Well, here we go. You could see both the stock and the bonds of the company, they are collapsing. They halted the stock, the bond. Nobody wants their debt. Who would want to own a failing company's debt? I mean, it doesn't make any sense. So that's why they're collapsing through the floor. And this just makes it even worse because you could see that there is a domino effect that occurs. This is not going to be turned around. This is just like Evergrande. Okay? No difference. Really no difference when you think about it. And Green Oaks Capital VC firm warned founders about SVB last year. But of course, nobody listens. Nobody, that's pessimistic. No, we don't want to know about that. But that's where we are at today. We can see the writing on the wall. It's here right now. Bank run has happened. Is this going to mean the collapse of the financial system? No, I didn't say that. That's for sure. But we need to realize that these things do occur when the tightening financial conditions, raising interest rates, and a general lack of stimulus. So will they then go in the next few months start to reverse course on their increasing interest rates, and they're going to actually cut interest rates? That's what the market believes. And if the market gets it, oh man, it's going to be hyperinflation to the moon, we could say. It is a very interesting scenario right now. Today, I'm going to bring out another video about this in the near future. Obviously, developments are happening. You've got to stay tuned to the channel, hit that subscribe button, and I'll see you tomorrow. Take care.